Good morning, everybody. Okay, I was told I was on mute. Well, that's okay because I didn't really, I was just kind of doing my preamble anyway, and the mouse just fell on the floor. Okay, so as I was saying, yeah, sorry about that. I had the mic on mute. I didn't realize it. So I'm on the road visiting my son outside of Boston and doing the best I can with the pared down setup I have, trying to figure out how to do it on two laptops, whatever. But you guys are here. I'm here. Um, for other people, I made today's Substack post a freebie when markets are in turmoil, quote unquote, as the CNBC headline goes. I'm gonna just kind of go with a freebie, and if it's of any help to anybody, fine. Hopefully, it is. However, the markets don't seem to be in turmoil. They were in turmoil last night, and apparently we're back to we're back to 6,000. Yawn. Nuclear war, maybe whatever. Mideast conflagration. It's okay. How's the volume, by the way? Good morning, Henry. Okay. So anyway, I gotta tell you, I expected somewhat of a bounce. I didn't expect to see 6,000 so soon. I had some put hedges I was planning on monetizing, and to me, this illustrates the power of gamma and structure. With everything that's happened with this war thing, whatever, with this huge breakdown, we broke down right to where some key features are, and then we're kind of bouncing right back up. So let me talk about the key features if I can figure out how to get the screen I'm looking for. There you go. Let me just make sure I have everything correctly set up here. Market Maker Net, 0 DTE. Okay, so here's what I mentioned in my note, I did my note a little differently today. The first thing that catches my eye is this fly-looking structure right here. Long, and you can find different structures anywhere, but this is like the biggest feature that I can see on the map. So that's what I'm looking at. So 5910 customer short, market maker long, supportive. In between these two potential magnets, quote unquote, or market maker shorts. And where did we bounce? Okay, so what did I say this is? 5930, right? So let's just take a peek. Oh, 5930. What do you know? Probably just a coincidence, right? And, and do market makers hedge when the markets are closed, whatever? The answer is, yeah, kind of, sort of, depends. Thank you for the happy Father's Day wish. The answer is kind of, sort of, depends. According to Carson Vol Signals, I was going to ask him to come on today. I don't know if with this technological setup and me being technologically challenged as it is, if I want to put myself and him and everybody else through that. So maybe we'll kick the can down the road for next week. But, as a former market maker, he says, that different desks do it differently. And in this kind of case, there's going to be some kind of hedging, just depends on, different time frames that different places handle. Anyway, so that said, I also said in my little note, I wrote it up differently today. I made it more of a narrative. Oh, you're welcome, Dennis. I enjoy this. I used to teach undergrad and grad students, when I was when I was in my doctoral program, I taught undergrad. When I got my doctorate, I taught master's students. That wasn't my main practice, but I always enjoyed teaching. It's just one of the things I like doing. So thank you. So then what I mentioned in my note is this structure right here. I said that basically it's thin here, because what do we got here? Between 5960 and 6020, just in the zero DTE structure, just in what has to be hedged out today. Of course, they have to balance out the rest of their inventory. But in today's structure, and why do we always look at today's structure, even though there's notionally much more? Because this expires at the end of the day. And gamma is, and I'll say this a million times, gamma is just to drive it home for people that aren't familiar with it like the back of their hands. Gamma is the rate of change of delta, and delta is what market makers are hedging. They want to be delta flat. There's no big secret market maker plot to drive the price toward one place or another. Their job is to have the minimal exposure and make the money selling you and me options and buying options from you and me. That's their job. They're options wholesalers. That's their job. And they don't want to take risk, and so they have to hedge out their delta, their exposure. And once we have our delta hedge, let's pretend we walked in here right this second, every delta's hedged, there's no problem. So now we have to hedge delta's going to change as as spot or SPX moves. How do we measure the rate of change of delta? Gamma. What is gamma most sensitive to? How close something is to the money and how close it is to expiration. Hence, zero DTE has a lot of influence. Okay. That said, in the zero DTE structure, there's really nothing much between 5960 and 6020. So when I was writing this up, I hadn't looked at the chart yet. Uh, last I looked, we were like flirting with 59, 50, 60. We were like somewhere here in the morning. And I was like, I don't know. The structure says 59, 60, 60, 20. Are they going to think I'm crazy if I write that? But apparently not as crazy as it looks. And so here we are. So here's your chop zone, a nice clear chop zone. When I write my note, again, it's not rocket science. This is what I look at. Nice clear chop zone right here. And then we have, so just remember, to the right, and let's not worry about the mechanics right this second. We'll have more content about that later on. To the right is market maker long. You can think of it as resistance or support, but that's not really as useful a way to think of it. For me, think of it, the mean reversion. So what that means is as we head up, market makers are going to sell because they have too much delta exposure. I'm not going to go into all that. So they're going to sell. But then as we move away, now they're too short, assuming this position stays the same. Oh, now they're going to buy. So you get the drift mean reversion here, and you get the drift mean reversion here. And that's why we often get stuck between two zones, and then we'll maybe pin on one or another of them, not because of some vast market maker conspiracy. I guess that's the way the math works. Okay, so here's the main zone without much in between us. We got a lot of crap, technical terms, sold down here. I didn't sell anything down here yesterday. I'm glad I didn't. Typically, I'll have a few 1 DTE or 3 DTE options sold, maybe a few flies that I'll put on cheapies, maybe 10, 15 wide, 5 wide even, just kind of where I think they may be. I'll typically put something on near the end of the day I had something at 6,000 I put on a week ago that I closed yesterday. Fly. Okay, so now let's look at the heat map. Now, okay, so 6,100 customers are long, market makers are short 7,000. We've been seeing this big feature here almost every day at 6,100. So somebody is long at 6,100. I don't know what the strategy is, why, I don't care, none of my business. But I do know it's there. And it wouldn't shock me if we hit it. Now, if you remember, I've been saying all week long, the top of the straddle last Friday was 60, 88, 92, somewhere up here. So maybe it's related to a straddle position. I don't know. And the bottom of the straddle was 59.07-ish. So basically 5,900, 6,100. And we're going to end up closing within that. CPI rally, war in the Middle East, doesn't matter, we're within the straddle. Thank you very much. Next. It's just kind of, I shake my head sometimes. So here's kind of the chop zone. There's that 60-20, and as a function of time, it kind of drifts and arcs. Here's a kind of dead zone, where like the path of least resistance would take us to the 75, which I mentioned in my note, and where did I get the 75 from? Right here. That's where I got the 75 from. And we have all this sold stuff down here. So if I can sell premium down here, and actually I'm going to take a look at that in a second. I will. Now here's just customer positions broken down. Okay, here's charm. So possible pins. Well, we're not going to worry about 6,100. So let's zoom in on something more realistic. I'm going to go out on a limb and say we're not going to pin up here at 60.75, although it's certainly possible. So let's just start off wide and maybe narrow it. So where do we tend to pin? We tend to pin below suppressive charm and, kind of where these meet. So 59.50, yesterday's pin area, maybe, but I kind of doubt it. I like this possible area for upside bullish pin, 2015, somewhere in the 10 to, so maybe a fly centered at 15, 20, something like that. But I don't want to get it now when we're okay, clearly. And these things morph and move around a lot as time passes. Another one right in here, 59.80. If we have a weak close, people not wanting to hold positions and maybe buying short dated protection in case of weekend something. So maybe an 85 pin, or maybe something down near 59.50, and of course you got stuff down here. And so that's what I'm looking at. That's what I'm looking at. So now let's pull up the old trusty option chain. And uncharacteristically, I don't have anything on for today. Holy moly. I'm willing to say that 5,900 holds. I'm willing to just throw one in for fun here, just as a placeholder. If I were to try something a little tighter, not everybody likes to go that wide and put that much capital at risk. 30 was the low in the overnight session, and we have that feature there. A 5 wide for 50 cents down here might make sense. Now, I'm just kind of showing you how I pick my strikes. Not investment advice. Don't call your lawyers. Well, you can call them if you want. My brother's 2 kids are lawyers. You can call them. So let's go back over here. So here's a potential magnet. I mean, doubtful. We have the support here, but in an abundance of caution, I would look to sell here, or even structure a broker wing butterfly where I'm long something here, short a bunch here, and long wider down here. I'm not going to bother doing that right now, but just kind of thinking out loud here, like we do as traders. So I like that 59.10 area. So 59.10. You want a 5 wide? No juice. 59.20, 65 cents. That's not bad for me. I would do one of those. We want to say that the overnight lows hold for you technical people. There you go, 55 cents. Not bad. And if we want to say that we're not going to break yesterday's high, 95 cents, decent. I know that might not be enough premium for a lot of people, but okay. So I'm literally putting these in. I'm literally going to leave them. I'm not worried about them if they blow up in my face. There's only one. There's a million ways for me to manage it. Maybe not a million, but many, including, let's just say this, if I get scared for whatever reason. So what would I do? Let me just get rid of these. I have room to show it. What might I do in this case? I might do that, buy another one here, and turn it into a fly. Easiest way to to manage it going against you. Turn it into a fly. Now, if it gets there, I make money, and if I do it for a credit, if I make the next part of my fly one up here, I can get a credit for it, whatever. That's one thing I would do. On the wider spreads, like stuff down here, let's just say the 59.25, well, whatever, it doesn't really matter what the spread is. Let's just say, okay, 59.30, 59. I'm going Cossack. I'm going for $2. I'm not going to go that Cossack. I'm going over here. What do I do if I get an OMG? I can do two things. I can buy something in here that would cost me. What would it cost me to buy something in here? Maybe 30-40 cents. And then my max risk goes from 15 to 5. And then, you can take out pieces, you can sell stuff underneath it. Or I could buy what I call a blocker right up here, right above it. A little more expensive. And depending how nervous I am, I might buy one or two, whatever. I might bracket it with, again, let's just say we're short the 25. I might bracket it with a 30-20, spending money. That's, or I might say, you know what, 59.50 kind of sort of should hold. And maybe I'll even try to make some money on a 59.50, have it as a blocker and see what happens. Maybe turn it into, maybe make a fly down here, 59.50, 59.50, 59.30. Ooh, right on top of where my short strike's at 25. Not a bad idea. That's the kind of stuff that I'll do to manage intraday based on gamma levels. Yeah, I'll do a more formal presentation on it. But off the top of my head, on the fly, I'm doing this. If I get in trouble, if I don't, I don't. If I don't, I'm just looking for scalps. And so let's take a look at what's going on here. Oh, no goats today because I didn't bring the goats with me in the plane to Boston. I couldn't get them on as emotional support goats. Okay, and so 6,000 fail again. Not a shock from a TA point of view, not a shock from a gamma point of view, not a shock from a psychological level. And we still have, I'm not expecting volatility to just stay muted like this and that's the end, although I haven't even taken a look at the vol space yet. That wasn't in my note. I didn't really look at VIX. It took me quite a while to just fight with my setup with my two laptops to find the screens, to find what I'm looking for. Anyway, that's my problem, not yours. Let's take a look at, it's not really a problem, it's just a reality. There are no problems, only solutions. Or navigating situations. It's not even problem or solution. There's situations, there's navigation, and there's flowing with life, being in harmony with the flow of life as being awake. Anyway, I'll get off my Zen and get back to this. Okay, 20. The old the old 20 VIX. And don't make me pull up a VIX chain or a VIX gamma chart and show you that that's the inflection point. By now you should know because I talk about it all the time. So we had that VIX 17.5, 18. 18 was the inflection point. If you guys were paying attention yesterday, and the day before, where there was lots of puts. Remember, the 18 strike put was loaded with puts. So over 18, they get to buy back whatever they were short. And then at 20, we had the calls. We had some more at 22, and that's where we went to. Overnight hedging in the VIX is not very liquid, is more liquid. That's why we sometimes get these crazy VIX spikes. To jog your memory, some of you might remember it wasn't that long ago. It was last August. Let's go to a daily so we can see it real quick. You might remember last August. Well, we're going to the wrong year. You might remember last August the JPY, the Japan carry trade nonsense. And if I zoomed it in on a different time frame, you would see we hit almost 60 overnight before we came back in. And that was because of the lack of liquidity, and we got even crazier this April. Anyway, I'm not going to go through all that right now. So let's just see where VIX is. Let's get back to the present moment. VIX is 20. The one-day VIX, I'm not sure when it updates, but the one-day VIX is based on today and tomorrow's option strip. I'm not sure exactly how. I've done a deep dive into it. It's not great. You can probably just look at the option chain in your IV and get a better idea. But yesterday, this was hovering around 14, even though all the craziness was going on. And I mentioned in my note, we had vol up, spot up yesterday. I think it was a combination of factors. Remember, we have all the override alpha funds that are long options, market maker short, not necessarily in the SPX, but the Nvidias and the whatever, the yield maxi kind of, not the yield maxi funds, like the Tesla funds that have embedded calls. So if the fund is long a Tesla call, market makers are short. If the funds have a couple $1 billion, suddenly it matters. So I think there was that, coupled with the left tail buying for short dated stuff, although we didn't even see a lot of short dated stuff in the chain today, in case of the Iran blow up, and that was the vol spot up my take yesterday. Let's look at VIX 9-day. The VIX 9-day, now I don't think these update pre-market, but I'm not sure. Looks like maybe they did. Let's look at a smaller time frame to see if the pattern makes sense. Yeah, it looks like maybe they did. So we're not in contango, we're not in backwardation. Everything looks normal. 9 is less than VIX, is 20. The not much term premium from the 20, from the 1 month to the 3 month is basically the same, but this was normal-ish before. VVIX, how did VVIX do yesterday during all that? Back to 100. So the VVIX-VIX ratio, 5-ish, is 5.5, whatever, is normal, well hedged. Market is fearful. And we have 100 divided by 20, 5-ish, back of the envelope math. Market is hedged. It's not loose. It's not unprotected. Could it go higher? Sure. Did it go up to something like 2 or 3 during the April insanity? Absolutely. So anyway, there's that. Okay, I'm going to wrap it up. It's already 9 o'clock. I babbled a lot longer than I thought I would. Let me see. I don't trust anyone who uses Microsoft Edge. Also, haven't they discontinued Skype? Yes, they have. Yes, they have. And I don't trust anyone who uses Microsoft Edge either. But a quick thing, the reason I use Microsoft Edge is real simple. For my normal stuff, I use Chrome, but I get so lost navigating through all the tabs I keep open. I'm that guy that keeps 30 or 40 tabs open, that some stuff I have on Edge so that I know where it is. I know where to find it. If that buys me a pass, I appreciate it. If that doesn't buy me a pass, then I guess you can unfollow. I hope it buys me a pass. Okay, so on to the plan, he says. Thank you. Time to figure out the plan for today. Good. Okay, so bottom line, what's the plan, Stan? Okay, let's go back here. It's 9 o'clock. Let's take a look here. And so the plan is, if you're a scalper, I would look for opportunistic scalps in this area, heading down to 60. You know, failure up here. You got the 6,000 where we've been failing. I would look to scalp towards 75. Expect slowing momentum here, maybe buy some kind of fly here. I'm going to sell puts down here a few and see what happens. And that's the plan. You know, I'm not going to go big on iron condors because we have a news day and anything can happen. Plan is watch to see what happens with IV. If IV go, so it'll be interesting to see if today we get something like we got yesterday with short dated put buying over the weekend. I can't see us going to that 60-20, up here and closing up here. I just don't see it with people buying protection into a weekend with a potential war, with potential deadline on Sunday. So the plan is kind of sell the rips, buy the dips much lighter in this zone, nimbly sell premium down here below 5,900 if you don't mind going far and wide, and above 60.50 if you don't mind going far and wide. If you like to play it tight, then the tight areas are here, the 20, 25, somewhere in here to sell, and the tight areas would be below 60, but we have all this crap that can pull us down if there's breaks. So it's, kind of touchy over there, but I like the 30 just from a TA point of view. And although it could be a magnet, it should bounce there. We have this 25 as support. We have this. So if you want to give it a little room and down here and play tight and sell it and buy it back at 50%, that's my plan. That's my plan. That's my plan. You all can make your own plan based on what I just said. Now I'm going to go listen to Vol Sigs. And have a great day, everybody. I'll try to be back. I'm not sure. My son will be here with his fiance a little later today, and we're going to go do lunch. So I'm not going to be around much. That's another reason why I'm probably not going to do much trading. Maybe scalping, not premium selling, because I don't want to leave a potential landmine sitting there and go have lunch and find out that I just lost $15,000, $20,000 on a nice lunch. So yeah, that's my plan. But I'm going to try and get back on if I can. Binkus said he's going to be scalping. I'm not sure. Oh, thank you. Thank you, my buddy. Please like, subscribe. I don't have my links in there. I don't have my links in the thing today. like I said, I'm technologically challenged. It's hard enough for me to find the copy and paste where my links are when I'm home, where I know everything is on my 6 screens with my Chrome and my Edge. Uh, I used to use Skype a lot, by the way, so I'm making Skype. I used to use Skype a lot. Me and my brother Binkus, for whatever reason, we would text when we were doing computers and screen sharing and whatever, copy and paste on Skype. Whenever it was that we started doing that, I think we started using that in 2016, 17. There was a group of us traders that the guy that kind of started the group started it on Skype, and we all gravitated to Skype. And pretty much the guy that started it was a TA guy, and he blew himself up. He had a lot of great indicators, and they worked until they didn't work. He had a little TA service, and he had every PPO and MACD crossover and line sideways and whatever. And when the market was rallying, it was great. The market was breaking down, it was also great. When the market started trending and chopping, he lost all his money. And he went back to working for UPS. He was like a logistics manager or something for UPS. He quit his day job and did that. And then the group dispersed, and so, but we just stayed there, and that became our texting space. Anyway, okay, now I'm really done. Do you think we bounced before 59? Yes, I do. Gun to my head, I would say yes, we do. Yes, I do. I'm not going to be one of those guys that's going to say, well, maybe this, maybe that. Well, of course, maybe this, maybe that. But what do I think? I think we will. Do I know? Absolutely not. Your crystal ball is as good as mine. But I think we would. Yes. I'm going to take a stand, and I'll either be right or wrong. Okay, guys, I'm done. And this is good. I actually like this sort of questioning thing. So in the future, I'll try to incorporate that. If I can encourage you guys to ask questions, I can put them on the screen and we can kind of speak this way. I kind of like this format as well. And this is a work in progress, as you guys know. I've been doing this for a week or two, and plan to bring more of my friends on and see if we can make this valuable for everybody. Okay, take care. Have a safe day, everybody. Happy Father's Day for those who celebrate. Bye.